Subscribe to our YouTube channel and press the bell icon to never miss any update from Samco.
Hello everyone, welcome back to another IPO review video, and today I am going to talk about upcoming IPO of Macrotech Developers Ltd, popularly known as Lodha. Macrotech Developers Ltd is one of the leading realty player in India and is opening its Rs. 2,500 crore IPO via fresh issue by selling 11% stake in the company. The issue is open from 7th to 9th of April and is priced at a band of Rs. 483 to 486 per share with a lot size of 30 shares per lot bid. Macrotech Developers Ltd, aka Lodha, is one of the largest real estate developer in India by residential sales value for FY14 to FY20. Their core business is residential real estate developments with a focus on affordable and mid-income housing. Currently, they have residential projects in the Mumbai metropolitan region and Pune. Lodha currently has 91 completed, 36 ongoing and 18 planned projects with a total developing area of 151 million square feet. It is also developing logistics and industrial parks across strategically located Palava region near Mumbai. It has a 10% market share in the overall MMR region, which is the highest among its peers, with strong foothold in affordable and mid-income segments in Thane and central Mumbai regions. Apart from India, it also has investments in the UK market worth 20.8 crore GB pounds. Let's talk about some changing dynamics in the real estate market. Real estate market in India witnessed several game-changing reforms in the last 3 to 4 years like RERA, GST, and also have gone through crises like demonetization, liquidity crisis. But despite COVID-19, in Q4 FY20, the sector witnessed rebound in absorptions to 86% as against Q4 FY19 on the back of low interest rates and stamp duty cuts. This further led to improvement in affordability ratio. If we observe the absorption and supply chain graph, we can see a clear gap between the same, which is the highest since past 5 years. This indicates that demand is higher than supply and it clearly bodes well for the real estate market in India. Also, due to COVID-19, a lot of small developers were kicked out of the market due to liquidity crunch. This further helped organized players to gain more market share. Lastly, with continued work from home and online schooling, people now prefer larger and functional homes, which is likely to further help improvement in demand for this sector. In the last 6 years, the top 7 Indian real estate players witnessed cumulative sales of 11,880 billion of organized residential developments. In 2019, Lodha Group accounted for the highest share of 3.5% in terms of sales value across the top 7 Indian market players, followed by Godrej Properties with 2.6% sales value. During FY20, Lodha Group accounted for highest sales value, collections and revenue from operations among real estate developers in India. Moreover, from FY14 to FY20, it recorded highest sales worth Rs. 50,000 crore, nearly 2 times its peers, with decent deliveries of 57 million square feet. With this, Lodha Group has now become one of the largest real estate developers in India by residential sales volume and area delivered. But the company has consistently struggled to manage its financials due to high project costs and its ballooning debt. Its revenues have shown a clear downtrend even after clocking higher sales for FY14 to FY20. The company has struggled to increase its revenues as the revenues are recognized only after the completion of projects. Cost of project has continuously rose from 66% in FY18 to 77% in FY20, which is the biggest factor behind this declining trend in its financials, except loss of sales due to COVID-19. Also, the trend of high sales during COVID-19 period is largely due to waiver in stamp duty and all-time low interest rates. It would be interesting to see further how sales numbers of real estate players pans out post these relaxations. The biggest concern for the company is its high debt. As the real estate business is considered to be a capital intensive one, the company's debt levels has gone way above its revenues. Its debt as of December 20 stood at Rs 18,662 crore, which is down from 25,000 crore in FY19. The developer plans to use Rs 1,500 crore out of the proceeds to repay its debt and claims that post-listing and from other potential cash flows, it plans to reduce its debt to Rs 12,700 crore. Declining ROEs due to high cost of projects and inconsistent cash flows further shows its inability to service its debt. Coming to the risk in this IPO, which I have already mentioned some, high debt remains to be the biggest risk for the company, and as per the management, it plans to reduce its debt through potential cash flows from 5.5 million square feet unsold inventory, land and asset monetization, and surplus cash from UK worth Rs 1,500 to 2,000 crores. Contingent liabilities to the tune of Rs 782 crore comprising customer disputes, corporate guarantees, and tax-related matters are also a big concern for the company. Also, the company and its subsidiaries are involved in litigation matters under civil category for a dispute amount of Rs 8,740 crore. Apart from this, since the company's most of the projects are located in MMR regions, it is exposed to concentration risk going forward. Lastly, increasing cost of projects as against its revenue could also be a big risk for the company. To conclude, although Macrotech Developers looks fairly priced at a PE of 26.3 times and price to sales of 3.3 times as against its peers, but factors such as high leverage and its third attempt to raise funds through IPO and declining ROEs makes this issue unattractive from an investment standpoint currently. The IPO can see some listing gains depending upon the market sentiment, but we recommend investors to wait for a few quarterly results to judge improvement in its financials. Thank you.